Hi everyone, welcome to Thursday, where of course we do a share and review. Today I've had a viewer request that we take a look at UnitedHealth Group. Now they're trading on the US share market, so this is a great one to have a look at. Before I do that, just remember that this is for educational purposes. We're only looking at the methodology I use and how I evaluate shares. If you're wanting personal financial advice, remember you do need to go and have a chat to your own financial advisor. If, however, you're wanting to learn a little bit more about share trading, then reach out to me. I'm happy to help. Also, if there is a share you would like me to review, by all means, pop that in the comments or reach out and we will take a look. Right, let's have a look at UnitedHealth Group. Today, I am going to use a different trading platform. I'm using Beyond Charts Plus, and because I use this a lot for the US market, it doesn't have the New Zealand market on it, and I haven't subscribed for the Australian market, but it is something that I definitely use for the US market. So you can see it here, I've got UnitedHealth Group on the screen. Now I've got this on a weekly chart, and just as if I stand back and look at this chart, I'm thinking, wow, we have had 6 weeks in a row where the market has fallen, and that was back in April this year, and wow, it's had a huge drop. We saw a couple of weeks of a rebound, another week down, 1 week up, and then we had another 5 weeks of down. We've had a couple of weeks of strong ups, which they do look promising. However, I'm not into trying to guess where tops and bottoms are in a market, but you can see that last week closed down. Let's have a quick look at the daily chart. You can see here on the daily chart, it's quite a noisy share, if you like, from my point of view. There's lots of gaps, so there's lots of volatility, and it's really hard to invest in a share like this where you get these big gaps down, because it could potentially fall through any stop losses that you have in place, and next minute it's like trying to catch a falling knife, so to speak. You can see we've had a good gap up, which is great, but we then had 3 days in a row where the market came down. Yes, it's had a little bit more upward momentum, but nothing too exciting. Let's go back to the weekly and have a look. Now, one thing I'm going to put on, I've got something saved here. It's called a hot and cold sector. So if I just pop that on, what it's doing is, because UnitedHealth Group is on the S&P 500, I have bought up. I've got this preloaded. It's got the S&P 500 return there, and it's also the grey line, if you like, is giving me the exponential moving average of this share versus where the S&P 500 is. In my example here, the blue line is well below this green line, which says to me that UnitedHealth Group is well and truly underperforming the S&P 500. That is something that I would not want to look at. Purely for that reason, I would want to see that the blue line is trading above the green line for at least 5 weeks in a row. So that for me would be an immediate knockout. Let's take that off, and we will put on our moving averages. And this one automatically brings up the exponential, and I've already got it loaded as a 30. I'll go in and change this one and make that 15. And you can see here on a weekly chart that the 15 week is underneath the 30 week moving average, and they're both falling. And you can see here that the share is trading below both of those. So again, that would be a no-go for me at this stage. I would want to see first of all, that share trading above both of those moving averages, and I would want to see those moving averages cross to the upside, like through this period back here, which was 2021, where you see the blue line is well and truly above that red line. Yes, it had the odd point where it dipped down, but on the whole, it was trending upwards, and it was a very strong trend, actually. So looking at my screen, it went from about $297 up to a good climb here, up to about $545, which is huge. That's a huge climb. But looking over more recently, from about April this year, it's gone from just under $600 all the way down to $307. So that is something you've got to be very careful about, and definitely use stop losses. So based on what I've seen, I would definitely not be wanting to buy this share at this stage. I want to see, one, that it's trading above the indices for at least 5 weeks in a row. And two, I would want to see that these moving averages have crossed through to the upside. And the third one is that the share is trading above both of those moving averages. So for me, I wouldn't even want to be going on and doing any more research on this particular share. But just for the purpose of this, let's have a look at the daily. Because I'm a medium to longer term trader, I base all my decisions on the weekly charts. However, the daily does give good indications. And you can see here that the 15-week moving average has only just crossed through the 30, and the share is trading above it, which is a good sign. But there's still too many red flags for me to want to go into this share. By all means, keep it on your watch list and just wait and see what happens, because hey, it could turn around again. It could be a really stellar performer, in which case you would want to jump back in. And when you look, if a share has a run like it has through this period here from the end of 2020 right through into mid to late 2022, there are actually lots of points along the way that you could have jumped in. Because remember that if a share is creating a new all-time high, the chances are it will create several of those in a row. Yes, one will eventually be the peak and it will fall from there, and that's where your stop loss will protect you. But it doesn't necessarily mean that you've missed the boat or you've missed the mark and you can't get in. There are lots of opportunities to always get into a share that's rising. So anyway, I really hope that's helped. It was great doing that research for you on United Healthcare. So if there's anything else, like I said, reach out. Happy to do so. Happy to do a review on it.